Hello, and hope you are doing well. This is Ahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week number 24 in 2025. As always, first let's check what we had previous week and see what's just happened lately, and then we can see the data ahead and our expectations from these data. Previous week, we had very important labor market data from the US, but at the same time, we had central banks meetings in in Eurozone. We had a central bank meeting in Canada, in India. In Canada, we know as we were expecting, BOC or Bank of Canada held the rate at 2.75% as it was expected lately because inflation is almost under control in Canada. But at the same time, especially because of the effect of this trade tensions, we know that economic growth is getting slower in Canada. So the Canadian Central Bank trying sorry, the inflation is getting higher. I mean, after weakening inflation, now we can see that the inflation again started to get higher. So between increasing again the inflation and economic growth, which is getting slower, between these, the central bank in Canada decided to hold the current position and to understand what exactly would be the effect of trade tensions on the inflation, and then they can continue either the rate hike or rate cut, continue the rate cut, or they're gonna have the rate hike. So that's why the central bank held the interest rate steady at 2.75% unchanged in Canada. On the other hand, in Eurozone, central bank in the Eurozone, because of the inflation, you know that CPI, the headline inflation, consumer inflation, fell to 1.9%, while the economic growth is slowing. So there was no reason for central bank in Europe to do anything else but to cut the rates. On the other hand, in India, to support the economy, especially in the current situation among the trade tensions, the central bank or the Indian Reserve Bank of India, RBI, they cut the rates by 50 basis points, while we were expecting only 25 basis points. So that means that the central bank in India trying to support this slowing economy. So this is what's happened. The previous week, in a labor market, U.S. labor markets also, as you know, that the labor data was very strong. Not very, but it was strong, at least stronger than expected. Even thought it was slightly cooler than the previous months, but it was stronger than expected. Unemployment rate was steady at 4.2%, showing that the U.S. labor market is still fine. I mean, the layoffs getting slightly higher, more, while on the other hand, leaving the jobs that also is getting less. So these numbers and these data says that the labor market is getting much more tighter in the United States, and finding the job is getting slightly harder. But at the same time, we have still more than 7 million GLT. The GLTs, it was more than 7 million. It means that we have more than 7 million vacancies in the United States. So the labor market, well, it's getting cooler, but still fine. On the geopolitical tensions, some peace talks between actually we can say that United States, but let's say the Ukraine and Russia, there was some peace talks. It was going fine a little bit. They get some lights of May solving this problem. While in trade tensions, we had a very good talks between President Trump and President Xi, and they decided to start the trade talks in this week, so it affects the market positively. Adding that, on the other hand, in the United States, you know that finally Mr. Trump and Elon Musk, they started some tensions between each other. I mean, it was expected to see. We know that Mr. Trump cannot hold the long relation. I mean, in his private life, he didn't have such before millennia. He didn't have such a long relation with others. But generally, yeah, holding the long relation is a little bit hard for him. So we were expecting to see these tensions between him and Mr. Elon Musk, especially with the character that we know from Elon Musk. Both of them, they were top five most powerful people in the world, especially the most powerful, most richest man in the world, with such a big difference with the second and the third persons. Generally, we were expecting this escalation between these two. But anyway, that happened. So that was really negative news for the stock market. Tesla lost more than 14% of its value. So that was what happened previous week. In the week ahead, it's gonna be the week of inflation, with especially the inflation number in China and United States. We expect to see the inflation in China still getting lower, with headline inflation annually to stay at 0.2%, negative that I mean minus 0.2% annually, and core consumer inflation, we expect to see that again it's also falling by 0.2% monthly. And the producer price index, PPI, expected to fall further from 2.7% to minus 3.2%, from minus 2.7% to minus 3.2%. That means that really I before also in the previous weeks also I mentioned, right now the Chinese biggest challenge is not the trade tension with the United States. It's the biggest tension, biggest concern in China is its domestic demand. The people in China, they are not spending their money. I mean, they don't want to spend the money. They don't trust in their future. So that's what the central bank and the government in China is supposed to do. Even before solving the trade tensions, they have to solve the domestic demand and domestic trust. So yeah, the lower inflation means that the domestic demand is still low in China. So the central bank and the government suppose should work on that. Exports expected to increase by only 5%, lower than 8.1% that we had in April. And imports was falling further from minus 2%, 0.2% to minus 0.9%. In China, we will not have any other important data during the week. That was the most important data. At the same time, on Monday, we have a GDP, first GDP from Japan as well. We expect to see the GDP to fall by 0.2% in the first quarter, but it's not going to change it's not going to change our expectation of the central bank in Japan to increase the rates by at least 25 basis points this year, because at the same time, we know that wages increase. We know that average earnings increase. We know that inflation is increasing. So we have a bunch of results to give the central bank in Japan to increase the rates by at least 0.25 basis point this year. So out of the Asia, let's go to Europe. In Europe, the most important data we have this week is the British labor market data, where we expect to see the unemployment rate to stay unchanged at 4.5%, or even thought it can increase to 4.6% at the same time. But the other thing that we have to watch is the average earnings. Average weekly earnings we expect to see at 5.5%, lower than 5.6% that we had previously, including bonuses. Excluding bonuses. Including bonuses, we expect to see average earnings to fall by 5.3%, to fall to 5.3%, which means that the labor market is getting weaker with unemployment rate, higher unemployment rate, that it can increase. There is also the chance of 4.6%, while the incomes also falling, which means that the central bank in United Kingdom can continue the rate cut and wouldn't be that much worried about the inflation. So these numbers will help the central bank in United Kingdom for the next week to cut their rates by another 25 basis points. On Wednesday and Thursday, the focus will be on United States inflation data and consumer price index expected to increase by 0.2%, and core consumer price index expected to increase by 0.3% on the monthly base, which means that the annually headline inflation should increase to 2.5% from 2.3% previously, and core inflation is supposed to increase to 2.9% from previously 2.8%, which means that the inflation is still sticky if that happened. But don't forget, if that increased much more than this, I mean, more than this expected, it means that inflation is more sticky and it can support the US dollar and put the pressure on the stock market. Don't forget about that. But that's one of the biggest and most important data that we have to watch. On Thursday, we have producer price index, where we expect the producer prices also to increase. PPI is supposed to increase by 0.3% monthly after 0.4% fall previous week, and increase by 2.6% annually, while the previous month it was increasing by 2.4%. 4%. That's what we expect from the week ahead and what we expect from as a data. Let's go to the chart and see what we have in the chart. I have to mention that in the week ahead, we will have too many speeches from central banks members, especially in in Europe. In United States, it's going to be the week before central bank meeting, which means that we will not have any speeches from Fed members as they are in a what this Zoom this time zone that they shouldn't speak. I forget the name. Yeah, so during this time, the members, the policymakers, they are not allowed to have any announcement or talk about the policies or banking policy in public. So let's go to the chart, see what we have in the chart. US dollar index, we were expecting between 99 and 101. We can continue these expectations as we have too many different data that they are against each other. Some of them, they can support the dollar index to increase higher, and some of them they can put the pressure on the dollar index. So, like the trade tensions, which is negative for the dollar index, and also at the same time increasing the rates. I mean, the banking rates or higher rates for longer, it can be positive for the US dollar index. So generally, these data against each other, they can somehow overcome on each other. So it means that the side movement with the uptrend tendencies expected, what we can say as expectation for the week ahead. While on the gold market, we with ongoing pressure on the on the stock market previous weeks, we saw some improvement in the gold touching 3,400, but profit taken plus lower the trade tensions. I mean, falling lowering the trade tensions between United States and China. We can say better this way. All of them, they can lower the risk in the market and the demand for the safe haven, which means that the gold price can go further, well, dip further between 2,300 and 2,200. That's the area we expect to see, for short and midterm for the gold. For the oil, uh, yeah, the trade talks and the positive news that's from the trade talks, they could be supportive for the oil price, but at the same time, we know that the meaning of international surveys for global economic growth for this year is getting slightly lower, as we had in Wells Fargo surveys, as we had in OCDC surveys. All of them, they are talking about the lower economic growth in the this year, which means that the lower demand for the energy as well. So that's why the uptrend that we saw in the previous days, especially on Friday, on WTI chart, it's a little bit outperforming. So we expect to see again the oil price for now again between 60 and 64 US dollar. That's the fair price right now. We know that from this month, another 411,000 nearly. I mean, new barrels gonna supply in the market, which means that the higher supply at the same time. Even thought it's going to be the summertime in the United States. We have more demand for the oil. We have more demand for jet oil, so generally, but still, that's why we don't expect actually not falling the prices, but we expect that side movement between 60 and 60 for again for oil. For the stock markets, we always talk about the S&P 500. Today, let's talk about the Nasdaq. The Nasdaq, which is very dependent on the interest rate as well. We expect to see around the same level that we have around 21,700, 800. It's at almost 700, 800. We expect to see reverse from this area, and we expect to see that the price is going to fall from this area for some correction and see the next trend when it can be. But for now, we expect for correction in Nasdaq and Dow Jones as well. That's about the stock market. We can say the same. We can expect the same reactions from S&P 500 and Dow Jones as well. On the cryptocurrency market, for the cryptocurrency market, it seems like the correction has started. If the price cannot prove itself above 108,000, we can see that the correction can continue through to 100. To 101, and then 96 and 94,000 US dollar. It's going to be the next step. But 108,000 level is the K level here. If the price cannot move above this level, it can fall lower than that. Yeah, that was what happened previous week and our expectation for the weekend. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.